Back in the action here once again, guys and gals. Always great to be here with you guys and gals on this evening's newsletter. But we got some work to do here tonight. Got a big Finally Friday, got a Non-Farm Friday session right around the corner. It's time to get back to work here. Got a big opportunity setting up for tomorrow's big news event tomorrow morning. It's Thursday evening, of course. It is June the 6th, 2019. My name is Joseph, by the way. And as always, this is your nightly newsletter. Now, as always, guys, I help traders find predictable, dependable, high quality, usually profitable trading opportunities using a simple 3-step trading strategy that we teach and trade together every morning in our trade room. And my job tonight is a little bit different. My job tonight is very important. My job tonight is to identify the best levels, the best setups, the best opportunities we're seeing for Friday. That's Non-Farm Friday's trading session. And we get a lot to cover here tonight. Besides the big news tomorrow, I've got some oil, S&P, Nasdaq, gold, and euro on the video tonight. I'm going to start off with that oil tonight, that black gold, that Texas tea, because boy, oh boy, that magnet we talked about last night, well, here we are, 24 hours later, we're up into that trading range with a nice strong spike. Anytime we see a run this strong late in the day, there's 4 different scenarios I've got to get ready for tomorrow. So we got some work to do here tonight, though. Looking at the oil here tonight, that black gold. Let's dive into that chart here first here to kickstart tonight's newsletter. And as I mentioned, right, we talked about this last night, obviously, right? That small, narrow channel, right? We knew we were probably going to get that run up into that magnet, and here we are now, right up into that trading range around 53. The most important thing right now on oil is the strength of this move. Anytime we see a strong move in one direction, we know the odds are very good that we'll see a pullback and a second leg right on the way higher. Now, in all reality, though, whenever I see a move like this, I always expect to see 4 different, not all 4, but 1 of 4 potential situations for tomorrow. I've got ranges, channels, flags, reversals, and we're going to talk about what each of those 4 will mean, what they'll look like, and how to trade all 4 of those scenarios tomorrow, because with a big news event right around the corner, I want to make sure you guys are ready for no matter what this market throws at us. But the bottom line, though, is I am looking for a buying opportunity here. And again, I'm going to look at 4 different possible ways that may manifest right for tomorrow. That's Friday's trading session. So if you're an oil trader, you're going to want to stick around for that chart here tonight on the video. Over on the S&P, as we talked about in last night's newsletter, trying to get that measured move. They finished off that big measured move up around that 28.50 area and change. And of course, now you can see your price pulling back here. Most important thing right now is we know we are bullish. That bullish market tells me I want to buy at support levels. I've got a beautiful hidden channel drawn across these highs, lined up at those lows. And I'm looking for a chance here to be a buyer off of that low. Now, to do this, though, there are a couple different scenarios I'm watching for. I've got 2, maybe 3 different entry patterns I'm watching for right now to buy this low. I'm also going to be keeping an eye on if this market dumps back down again, because you're not going to want to try to chase after that, because look where you are. You're right back into that range again. So we got a lot to cover here tonight on this S&P, right? If I can get the shallow pullback, great. But, in all reality, this thing may dump right back into that range, and I want to make sure I'm prepared for how to deal with, right, that range-bound market tomorrow. So if you're an S&P trader, you definitely owe it to your trade account to tune in here and stay with me here tonight on this video. Over on the Nasdaq is in a very similar situation, not as dramatic on that range as the S&P, but Nasdaq is bullish, as you can see. Nice big, right, bull rally higher. I got a bunch of measured moves, right? We know we're bullish. I want to be a buyer right now at a level of support. And again, like the S&P, I've marked up these highs. I'm lining up these lows. I love this support area down here because look at how much we have down here. The low of that channel, I've got a reversal line there, reversal line there. Boy, great spot, right? Down around this 72.50 area. I'll tell you though, it's not as easy as just buying that pullback. pullback, though, because if we can get a drop all the way down to that 72.40 and change area, this market is going to feel very bearish. And I want to make sure I account for and respect that momentum, because in all reality, they may hold it and run right back, and I want to make sure I'm aware of that, or we may get that buy going right back up to retest that high. So I'm looking for a pullback on this Nasdaq right now. We're halfway there, as you can see. But when we get that full pullback, though, this may turn into a very bear market in the short term, and then we'll talk about the best way to buy that pullback here for the long-term rally, going back up to retest that high. Nasdaq looks great. How about the gold? Boy, did we pick the pocket on the yellow metal last night. What a beautiful job in last night's newsletter. That beautiful crown reversal we talked about. I'll bet you guys thought there was no possible way that was going to happen. And sure enough, right back up. Gorgeous crown reversal. We talked about that last night on the newsletter. And unfortunately, we're only as good as our next trade, right? So we're getting ready for tomorrow now. Strong move up into a trading range. That's a range-bound market with a bull bias. Now, anytime we have a range-bound market, I want to buy low, I want to sell high. The bullish bias on this chart really is a big, big clue, because it gives the edge to those buyers. And ultimately, I'm looking to buy a pullback in the battle zone, or I'm also open-minded here for a breakout going higher, because I've got a target waiting up top there at 13, right, 48.9. How do we trade the pullback? How do we trade the breakout? I've got 2 patterns for the breakout. I've got 3 patterns right on the pullback. We're watching. Got a beautiful hidden channel here to use as well. Lots of good stuff there on gold. But we got some news tomorrow. We're going to talk about that here in a moment. So before we get too excited about gold here, though, make sure you stay tuned for the news recap here in just a few moments. We're going to break down that yellow metal in a lot more detail here in just a few moments. Over on the euro, wrapping up tonight on that euro. Boy, that pendulum swing back and forth here today. Now, the euro today, of course, strong move up, pulls back. Anytime we see a strong move in one direction, what should happen? They should try to get that second leg. At the very least, they should have retested that high. And what happened? They didn't even come close. Right? They backed off the high. Something's wrong, right? Something's wrong. So we know that we know that what should have happened, right, didn't happen here on the euro, right? Kind of like last night on the newsletter, we talked about, what's missing on this chart. What's missing on this chart? A retest of that high, right? That's what's missing. They're going to try to get that retest of that high. The problem is now we got some falling resistance. We got some rising support, moving average flattening out. We're a range-bound market, much like gold, which means I have to respect this sideways movement. I want to buy low. I've got a couple levels below me here, right? I got a battle zone. I got a hidden channel down here. I want to buy low here. There are a couple key components to a triangle, though, right? The only difference here on the euro to the gold is that this is a triangle, right? Triangles tell us a lot of really important things, and we're going to dig into how a triangle really tells us exactly where to look, when not to look for a trade, and how to get in, how to get out. We'll talk about that triangle pattern in a lot more detail, because it's one of the easiest patterns when you know how to trade it properly. So if you're a euro trader, right, make sure you stay tuned here tonight on this video. Got the euro, gold, Nasdaq, S&P, and crude oil. We are locked and loaded on tonight's newsletter, getting ready for tomorrow's Non-Farm Friday trading session. But before we jump into those charts, before we put the plan together here for tomorrow, I want to make sure to remind you, make sure you join our mailing list. Just before I publish our video on our YouTube channel, I always hit the send button to our mailing list. Our best clients always get the email heads up whenever our nightly newsletter goes live before anybody else. And I want to have you on that email list so you never miss another great video newsletter. To do that, it's very, very easy. All I need is your name, your email address, and then hit that subscribe now button. And don't forget, your job is not over when you hit that subscribe now button. You've still got to go in and check your email inbox. And don't forget, sometimes my emails get stuck in your spam filter. So check your spam, your junk folders, your promotions folders if you're using Gmail, because oftentimes, right, those links will end up there. So make sure you check your inbox for that welcome email. Not only do I need you to verify your email address, but I also have a bunch of goodies in there so you and I can make the most amount of our time here together on this nightly newsletter. I also want to remind you too, if you have any questions about the strategy, about anything we talk about here tonight, there's always a great spot to post those questions in the comments section below. If you have any questions for me, any feedback for me, I'm always listening to your feedback, right? What do you love about this video? What do you hate about the video? If you could change one thing about this newsletter, what would that change be? If there's one thing that you would never want me to change about this video, what would that thing be? I'd love to know what you love, what you hate, what you would change, and what you would do more of, right, in your opinion, if you were running the show behind the scenes here at our corporate headquarters in Los Angeles. Drop me some comments in the comments section below. It always means the world to me that you guys spend a little bit of time out of your busy schedule to give me some feedback in the comments section. And while you're down there in the comments, give me a thumbs up on the video tonight. If you tune in every evening, it would mean the world to me if you took a couple seconds. Give me that thumbs up, subscribe to our YouTube channel, because when you do that, it goes so far at helping me expose this video to other traders who can help from this information as well. So drop me some comments, give me a thumbs up if you watch the video and tune in every evening. And then don't forget, right? Don't forget, if the comments section isn't really your game down there, pick up that phone and call me in the office. I'm always here to help. You can call that toll-free phone number anytime you have any questions. That will forward right to my cell phone if I'm out of the office. So don't be afraid to pick up the phone, call the office. I'm old school. I actually pick up the phone when it rings because I know how important it is to work directly with our clients here. No call centers, no chat bots, right? No crazy phone trees, right? Call that phone number and we'll pick up the phone on that first ring, answer all your questions about charts, data, brokers, or maybe you have a question about how to get access to our trade room on a free pass or get access to our free trial, right? Call that toll-free phone number. I'd be happy to give you all the details there. But first, we got some work to do here tonight. You guys didn't come here to talk about calling the office, right? We came here to get ready for tomorrow. Tomorrow's Friday. It's June the 7th, also known as first Friday of the month. Tomorrow is the first Friday of the month of June. And what does that mean for us? It means we have the biggest news of the month. That means first Friday is always the employment situation, or as traders know it, as non-farm payrolls. Now, in case this is the first time you've seen this report, this is, in my experience, the biggest tradable news report. I say tradable because, FOMC, right, is the other big one, and it's not really much of a tradable announcement because it happens in the afternoon. This is one of those announcements, though, that is certainly tradable within reason. What do I mean by that? Well, here's the way it works. On Wednesday this week, we heard from the ADP employment report. Now, that number comes out on Wednesday and gives everyone a pretty significant heads up as far as what the number will look like on Friday. Now, it's not really relevant, but this week on Wednesday, the number came out pretty bad. And so they're anticipating the number to be relatively bad on Friday. Why does this matter? The reason why it matters is because it directly relates to how the market responds on Friday morning. You've got to remember, since we already have an idea of what that number looks like, whether we like it or not, the markets have pretty much already priced in what they're assuming that number is going to be. Make sense? Right? Whether it's on purpose or not, but once that ADP employment report comes out on Wednesday morning, slowly but surely the markets tend to gravitate towards where it would be if they got that number on Friday, right? The term is called pricing in the news, right? They assume that's what the report will be on Friday morning, and the markets will slowly kind of manifest their way towards those numbers. Now, why this is important is because tomorrow morning, one of two scenarios is going to happen. The news number will either come out as expected or it'll come out outside of expectations. So here's scenario one. The first scenario is the news comes out within expectations tomorrow morning. If that happens, the market usually sits for about 5, 10, sometimes 15 minutes as it kind of waits to see what everyone's thinking. So once again, if the news comes out tomorrow morning within expectations, this is not, it doesn't surprise anybody because we've already kind of had a heads up on that, right, from earlier in the week. And since the market's already priced that news in, it's not going to move very much. But where the real fun starts is if the number comes out on Friday and surprises us, right? And the rest of the market will react usually quite violently. You've got to remember, we don't do this as small, retail traders, so to speak. But if you worked for a big trading firm and you have to trade all day, every day, right? The only way trading firms make money is by trading, right? They don't get anywhere by being flat, right? So the way trading firms work is they've got positions on into this news tomorrow, right? Believe it or not, they've probably had positions into the news as of Wednesday afternoon. Now, tomorrow morning, if that news comes out tomorrow morning and it shocks everybody, whether it's way above or way below expectations, here's what's going to happen. Everybody who's holding positions, they now have to go out and manipulate those positions based on what the new number says. Now, most trading firms will say if the number comes out as expected, here's plan A. If it comes out above expectations, plan B. And if it comes out below expectations, plan C, right? So when the news comes out tomorrow morning at 8:30, and if it surprises everybody, whether it's way up, way down, doesn't matter, you will see the market become increasingly volatile. In fact, dangerously volatile. And in that situation, once again, you want to give it 5 to 10 minutes to let the dust settle. So as you can see, whether or not we come within expectations or outside of expectations, we're either going to see a real slow response or it'll be violent. No matter what, we still want to give it, 5 to 10 minutes after that news comes out. Now, in the past, right, in the last few months of this stuff, it's been a relatively slow and steady reaction. But tomorrow, here's the deal. I'm going to do my best tonight to put together all the levels that I think are most important for tomorrow. But there's no way for me to tell, right, if all hell breaks loose tomorrow at 8:30, I don't know, I have no way of telling how the market will respond. So I need to rely on you to use your head tomorrow. Use common sense tomorrow, right? If the market's bullish tonight and we see a huge run lower, please do not try stepping in front of that freight train. This is a very big announcement tomorrow morning at 8:30, and I don't want to see you getting run over just because a support level that I mentioned, right, is standing in your way. So please don't try catching a falling knife. Please don't try stopping a freight train, right? I'm going to do my best tonight to give you my strategy for tomorrow. But again, like everybody else, we're all going to be watching that number come out at 8:30 and see what we get from there. That's one of the big reasons why tomorrow morning I would definitely recommend come join me in the trade room at 8 o'clock Eastern time, because there will be some great setups tomorrow. We just have to stay patient and don't spend all the bullets, right, too early in the session when things are really sloppy around that news number. Now, another question that I get a lot is, how about before the news comes out? Now, typically, markets are pretty slow ahead of that non-farm payroll number. As I mentioned last night, right, to expect this afternoon to be relatively slow, and it was, right? It was relatively slow, without, comparably speaking, compared to previous afternoons. But the most important thing is really keep your eyes open overnight. The last few months, I've been pleasantly surprised how much movement we got on markets like gold and euro and oil, those big commodities in the pre-market. Historically speaking, markets are pretty slow before that number comes out overnight. So just, again, use common sense. If we're not moving very much, you know what's happening. But if we've got some decent personality and some good consistent tempo to the price action overnight, I don't see anything wrong with trading up until about 8 o'clock, 8:05 Eastern time. Then you've really got to be careful as you go into that 8:30 block tomorrow morning. All right, guys. And as always, tomorrow is a Friday. We'll be in our trade room, as always, at 8 o'clock Eastern time. And just remember, on a Friday, you really want to get in early and get out early. So tomorrow morning, with that number at 8:30, I would assume that our meat and potatoes tomorrow will be right around 9 a.m. to 11 a.m. Eastern time. We continue to see great opportunities around 10 o'clock. So I would definitely keep your eyes on that 10 o'clock time. But again, I would imagine the employment number will come out. We'll have to give it some time to let the market kind of settle in. And then from 9 o'clock to about 11 o'clock, you really got to have a good reason to be trading after 11:30, 11:15, 11:30 on a Friday morning. Just because, remember, at the end of the week, right? And this is not just the end of the week, end of the day, end of the week, end of the month. Traders take bigger risks. They do. And when you combine a more risk-tolerant marketplace with lower volume, because professionals know better than trade in the afternoons, you get a recipe for disaster. So be careful tomorrow afternoon. If I have it my way, we'll get those setups shortly after the employment number comes out, 8:45, 9 o'clock, 9:30, and we'll be off for the weekend right with a good profit. So make sure you follow that plan. At least be very careful tomorrow. And again, right, we'll go over this together tonight, and tomorrow morning we'll execute the plan with a front row seat tomorrow at 8 o'clock Eastern time. Speaking of which, let's get this party rolling here. I apologize for that lengthy introduction, but I wanted to make sure you were educated on what to expect. At the same time, I kind of wanted to scare you a little bit on that, because it is something tomorrow that if you don't respect the volatility tomorrow morning, it can really do damage. You can give back all the money that you made this month so far, really, right? In one bad choice tomorrow morning. So really be careful on that. Okay, jumping into the markets now. Crude, S&P, Nasdaq, gold, euro. Let's start off here first on the black gold, the Texas T. We spent a lot of time today, right, inside of that trading range before really getting that jump, right, as we go higher. We got that big jump up. We're inside that big trading range that we talked about in last night's newsletter. So we know that this is definitely a real attractive area for those buyers. We know that we're probably going to see a pullback, right, on this chart. But in all reality, whenever I see a big, strong run up like this, I really know to expect one of four scenarios. Let's talk about those. The first scenario is going to be a spike up into a channel. This is by far the most common, right? It's called a spike and channel pattern. Spike and channel patterns are very, very common, and they tell me to buy that pullback down to the deepest part of that channel. The second possible scenario is going to be a spike into a range. That is also a very common situation. Spike into a range. Spike in ranges tell me look to buy below the low, right, of that trading range. Second scenario is a spike into a flag. Flag patterns are a little tricky because they pull back with a channel. These are not bear marks at this point. They pull back with a channel. The best way to trade a flag is up, over, and go. And then, of course, the last one, which I don't expect, but hey, always want to be prepared for it, is a complete reversal. A 1, 2, 3 reversal. Anytime we see a 1, 2, 3, what do? We mark up that low, mark up that high, mark up that level, and we're selling right off that sweet spot. So these are ultimately the four basic scenarios that I'm looking for. And ultimately, the ones that we should probably see here are number 1, number 2, and hopefully not, maybe, right, number 3 over here, right, that last one there. I guess that would be number 4, I guess, if I can count correctly there, right? So 1 and 2, again, the first one here is going to be pretty common. That's your spike and channel. In a spike and channel pattern, you want to wait for that deep, deep pullback, right? In a spike and range situation, you want to wait for that failure pattern. And then, of course, if it's a flag scenario where it's a bear channel, get above it, right, and buy that pullback. And then if it reverses 1, 2, 3, right, channel, channel, low and selling off of that high. Don't forget, grab a screenshot, save this in your journal. These are 4 scenarios I'm getting ready here for tomorrow. So as I look at this chart right now, okay, as I look at it now, you can kind of see here already, I'm already kind of looking for it as, okay, that's probably going to be your spike and channel. Right? So there's your spike and channel right there. What I'm looking for in a spike and channel is I want to find that deep pullback. I want to get that deep pullback. And then what I always want to do is, if this is my, for example, let's get that battle zone out of here, right? If this is my channel, let's do this. Let's zoom in a little bit closer there for us. Perfect. If this is my channel here, right? If we do continue here now, right, running higher as we go, I'm gonna watch the base of that channel, right at the base of that channel and that first pullback area, right? So right there and right there on the illustration. And the pattern I'm looking for here is, I'm looking for a deep pullback. That will bring the moving average back down. I look for sellers, very important. I look for sellers to try to sell off the moving average. Okay, counter trend sellers, and once those sellers are clearly short off the moving average, I pinpoint where their stops are, right? Stops will be sitting right above that high, and literally I look to buy into those stops, and then if we get lucky, we get the pullback, and we can get our combination pattern here, right? It'll be a failure pattern, right, into a pullback setup, and then back up we go from there. Very, very common pattern whenever we see a strong spike. Now, what if we get the pullback, right? We bounce and we double top. Then what do we have? Then we have a range, right? So if we start seeing it go sideways here on the screen, right? So if we start seeing it double topping, double bottoming, right? Moving average starts to flatten out here. If we start going sideways, which could easily happen as well, now what do? Similar to the spike and channel, I wait for the market now to run lower. I get that moving average coming over. I wait for the sellers to try to sell into that pullback. Right? You'll see lots of examples of these, kind of like right there, right? Where they go down, they try to sell into the pullback, right? And of course, stops are right there, so you're buying into those stops, right? It's that type of pattern. But again, what you're looking for here is you want to see it go down, get those bears to sell off of it. We know where their stops are, right? And we buy into what I call a 2-try failure pattern. Right, so very similar to the spike and channel. That's going to be scenario number 2. The third scenario here. Okay, this is the tough one. Okay, we pull back, we go up, we make a lower high. If we make a lower high, now we know there's a trend line there, and that trend line will almost always result in a channel. Now, when it comes to a flag pattern, you want to think of the rule of 3. Right, 1, 2, 3. Usually it's 3, and usually it's very slow. The giveaway for a flag is that it feels like the market is kind of dragging through molasses, right? It feels like the market is disinterested. It really does. And the reason why these patterns are so confusing is because people start to think that it's bearish. But the problem is it's not a bear market because of the way it pulls back. And we'll talk about a reversal here in a second, right? And I'll make it very clear what the difference is. This is obviously being drawn a little bit larger just for emphasis purpose here right now. But the key is, right, it'll be very slow, right, as it pulls back. As it pulls back, it's really slow. That's how you know it's a flag usually. And again, you usually go 1, 2, and 3. Anyways, once we see that flag, now we're up. Do not chase after it as it goes higher. That's the trap, right? And then wait for that pullback, and we're pulling back from there, right? A breakout pullback or a 2-legged pullback, right? Almost like a 2-legged pullback pattern that we talk about quite a bit, right, on this nightly newsletter. That's a flag pattern for tomorrow. And then as much as I don't think it's going to happen, it easily could, because remember, you've got that range where we spent most of our time together today. In fact, if you were to put one of those fancy volume indicators on here, right, you would see most of the volume we piled up, right on top of that area right there, right? You don't need those fancy volume indicators. Just find overlapping candlesticks. Anytime you see overlapping candlesticks like this, you know that a hell of a lot of volume piled up there, and that's what results, right, in those high volume nodes, right, as they say, and all that complicated literature. I don't think you need all those tools. Just look left, find where the moving average flattens out, find where the overlapping candles are. That's where the volume's going to be. And if they do, right, again, if we do collapse here, it'll probably try to collapse back down into that trading range. Now, what would a reversal look like? There's one very specific pattern we like to use, right? We saw one back there, right? What is it? It's a 1, 2, 3 reversal. So here's how it works. 1 is a strong move down. Okay, that's the first step. It's not the final step, though. You don't want to try to sell that pullback now, right? You do not want to try to sell that pullback right now. Selling that pullback right there is like selling that pullback right there. Strong move down. They come in, they try to sell off the moving average. Well, guess what? Nope, right back up to retest the high. I'm going to be looking for, as long as it doesn't happen right at 8:30 tomorrow, I'm looking for that seller failure and that buy right back up, right, on that spike in channel or on that range setup. So we can't just sell that first pullback, right? That's the fool's pullback right there. Strong move down, right? Strong move down. Let those sellers, right, sell off of it. That's the key. This is the 1, 2, 3. Right? 1, strong move down. 2, pull back to the moving average. 3, strong move off. Now, what do we do from there? Once we see that strong jump off the moving average, now what? Do we chase after it? No. Right? Rookies do that. You're no longer a rookie. You are an experienced veteran, right, in the big picture right now, because you know better than chasing after markets. You know in a bear market now, we sell at resistance. Where's resistance? Mark up that low. Okay, that's your baseline. Mark up that low. That creates one side of the channel. Now, up top, draw off that high. Okay, yes, you're correct. I'm purposely not drawing it off that high. That's not the channel I'm looking for. Okay, you're more than welcome to disagree with me, whatever you want. The more reliable is going to be up here. And I mean, if you've been following along with the newsletter, you probably have seen hundreds of examples of this stuff working that way by now. Now, from there, there's my sweet spot right there. Okay, that's your sweet spot. It's a combination of that first leg low, right, with the high of that hidden channel. Okay, that's where we look to sell off the hidden channel. So there are 4 different scenarios now. Okay, we are bulletproof now. The only thing we can do tomorrow is mess this up by trying to trade the actual news. Now, this is where things get more difficult, right? Because for all I know, this market will tank on the news. It'll run on the news. I don't know, right? That's why I say tomorrow morning, I need you to either be with me tomorrow in the trade room and we'll do it together, or try your best to use some common sense, be disciplined, be patient, wait for that number to come out, right? If it just runs back down, okay, we're probably going to be back inside this range here again, and we'll probably end up with the 1, the 2, the nested failure, and then back up in, because that momentum is so strong. But again, that range will be really strong. If it runs higher here, then nothing really changes, right? If it runs higher, not a lot changes, right? We still look for that spike in channel, right? That spike in range, that flag, right? Not a lot changes at that point if it runs higher. That's why I say it's if I was to guess right now, honestly, I would guess this thing goes sideways because it's inside of that range. Right? It's inside of that range right now. So I would guess it goes sideways, but again, I mean, it's just a guess at this point, but at least now you have the right strategy for it. Right? If it goes sideways, it's 1, it's 2, and up from there. All right, guys, really, really good stuff here on the oil. And I got to keep moving right now. I have so much more, though, that I want to share with you. So here's what I'll do. If you want to learn more about these patterns, if you want to get a deeper dive into the entire strategy that we use every morning in our trade room, here's what I'll do. I'll put a link in the upper right-hand corner. I'll also put a big red button here tonight right below the video on our blog, upper right-hand corner, or below the video on the blog at Sideways Markets, and join the free trading class. Now, as part of that free class, you'll learn about my 4 favorite entry patterns, how I use technical analysis. I'll send you hundreds of real examples of these setups, right? A daily chart lesson. It's the best free 99 you're ever going to invest in your trading career. You'd be a fool not to take me up on that offer. I'm kidding with you, obviously, right? If you don't like the money in your trade account, do not take me up on that offer. But I know you guys take this thing seriously, or else you wouldn't be watching this video right now. So grab that free class in the upper right-hand corner And don't forget, when you grab the free class, don't forget, you got to check your inbox. And sometimes those emails, they go into your spam folder, right? So check your spam, okay? Don't give me any of those bull crap, email addresses where you don't check the email, right? Because I got to send you the access to the free class. So real email address, check your spam. Feel free to waste your own time if you don't want to give me some real good information there. Okay, let's keep going. S&P, let's keep rolling. Believe it or not, people actually use fake email addresses for the free class. It's like, okay, I guess I'll send it to the wrong email address then. Anyways, off my soapbox. Back to our S&P now. S&P, what do we know about the S&P right now? We know the market is bullish, right? We know it's bullish. We also know we have, right, a number of measured moves up here, right? Measured move, the major measured move we talked about in last night's newsletter, and that smaller measured move, right, from today. So this area right here, right, is obviously going to be a level, right, of resistance here. So we also know I can line up these highs, bring it down to that low. The midline looks gorgeous right in the middle there. That is a bull channel. Okay, that is a bull channel. What else do we know? We know the market went up. It double topped and pulled back. That is usually a very, very special level. We call those reversal lines, up and over. That's going to be a great level of support as well. So these are some of the things that we really know about this market right now. I'm bullish. I want to be a buyer. I want to buy at support levels, right? I get my support levels at my reversal line, my support levels at the low of this channel. And you'll notice, right, they just dip their toe right inside that battle zone, right, as we go. I want to buy at support, but there's one big problem I see right now on this chart, and that is the size of this channel, okay? For example, we know that when I have a very narrow channel, there's very little that the bears can do inside that channel, right? There's not much I can do if I'm a seller inside that channel. If I have a much wider channel, right? A much wider channel. What does a wider channel allow me to do? A wider channel actually gives the sellers, right, some firepower here, doesn't it? It actually gives those sellers a little bit of an edge as they make their way back down. And that's the most important clue that I see on this chart right now. In other words, I'm expecting there to be some bears that really try to enter this market and send this puppy back down, right, into that trading range, right? Back down into that trading range. And this is where one of my favorite patterns comes into play, and that is a two-legged pullback pattern. I'm expecting there to be some bears in this market. As this market pulls back now, I draw a trend line over the top. I wait for those sellers to try to sell into it, and I use that trend line, right, as a level of support. So very, very specific pattern there. You'll notice, right, there's almost an example of this right back here, right back there, right, where they come down. We draw that trend line over, up and over, again, at the low of that channel, right, you're buying off of that low. Very, very similar to that scenario here, right? So draw the trend line down over the highs, right? Draw that trend line down over those highs. That becomes my resistance trend line. I've got a 1, a 2, up and over, right, and go from there. Now, at this point, right, that two-legged pullback pattern looks pretty good. If I zoom in on this, right, a little more, right, get a little more intimate here on this, draw that trend line down, right, 1, 2, up and over, and go. I think for me right now, the most important thing is to make sure that we don't close below that 36.5, right? That 36.5 area. In all reality, what I'm really trying to do is I'm trying to combine that reversal line here, right, along with that trend line. That'd be a beautiful two-legged pullback pattern, right, for that setup. Now, here's another possible scenario that I'm watching for here right now on the S&P. Look at this little guy right back here. Right, what is that? A couple double tops are in there, right? Double top, double bottom. Okay, that could end up settling in here now for a range. So if we end up sitting here sideways now, Okay, that's one viable option here for tomorrow. My biggest concern is going to be that we end up on the opposite side of this range. Okay, right? We break the low and we go deep into that trading range. If we can get the pop back above, we look great for that failure, that two-legged pullback setup, right, and that move back over. Okay, if we end up running back into that range, though, now we have to respect this as a range. Okay, if we do end up dumping back down right into that range now, what's going to happen? The market will turn into a bear market. But look where it is. It's now at the low of that range we talked about in last night's newsletter, right? This is a big, big range, right, from about a week left in the month of May. If we run back into that range right now, a couple things are going to happen. One, we may end up sinking back in and then rotating back and forth inside that range. If that's the case, now the pattern is pretty simple. I'm going to look for that one try for the bears, let the moving average come over, right? Moving average, of course, goes flat at that point. Let it come down. Get those bears trying to sell off that pullback now, right? Get those bears trying to sell that pullback. We know where their stops are, and we're looking to buy right into those stops. Does that make sense? Okay, so if we do end up collapsing back down in, but then we kind of hang out in here for a bit, that will negate a lot of that bearish momentum, which is exactly what we need there to be a buyer off of that low. Remember, it's a range-bound market at that point, and when I buy low, I want to sell high from there. The other scenario is, again, this is if the market collapses back in, right? At this point, I'm looking for an up, a down, right, and basically a buy, right, off of that area of support. If this thing closes strong back in and just runs back down, now this becomes a very bear market. I'm still in a range though, right? I'm still at the low of that range. I still want to be a buyer going back up into that range. How do I do that? How do I buy in a bear market? I want to use that nested failure pattern, right? That 1, that 2, and up from there, right? 1, 2, and then up from there. So 1, 2, right? And then up from there. Let those bears try twice, because at that point, that momentum will be so strong for the bears that we'll have to respect that momentum. The bears will try to sell it once, most likely. They'll try to sell it twice, and then once we see them trying twice and failing, now we can be the buyer going back up to retest that high. Now, what if they blow right through it, right? What if this thing really runs and keeps going? Where are they trying to go? They're probably trying to go right back where we came from in last night's newsletter, back down to that trading range. So this thing really runs 1, 2, 3 and turns bearish. You know where they're hunting for. Find that new low, up off that high, right? You got it, and we're selling off that high. That's that same basic 1, 2, 3 reversal that we talked about before. But again, they've got to hold that pullback to really qualify that breakdown. If they go higher here, right? If we go higher here on the S&P, okay, if we do get, let me zoom back in on this real quickly here, sorry, right? If we do get that two-legged pullback, right? If we do get that two-legged pullback, where's my target from there? My target now is this leg, right? Up we go from there, right? That will be my next target now on the way higher. And again, because tomorrow is that non-farm payroll number, right? That target may get blasted right through, right? What if we just run? If we run, now you know those 4 basic patterns, right? The same 4 patterns that we talked about on the oil market, right? If we do make that strong run higher, we know exactly what we're waiting for as it spikes up. Spike in channel, spike in range, flag pattern, right? Or of course, potentially the reversal right back down in. So again, we're watching carefully here right now. I've got a great level of support here. I'm expecting bears to come in and try. I'm going to buy right into their failure here if I can get the setup. If not, we go in. If we sit inside this range, wait for the 1, the 2, and buy back up, right? If we go in, by the way, and sit inside the range, I can also go 1, 2, and sell back down. right? That same two-try failure pattern that we've seen so many times in the month of June already. And again, like I mentioned earlier, right now I'm just illustrating some different scenarios I'm looking for tomorrow. If you want to see hundreds of examples of all those setups, grab that free course in the upper right-hand corner, right? Or hit that big red button below the video tonight on our trading blog. Let's keep going. How about the Nasdaq? Nasdaq is very similar to the S&P 500. I think the Nasdaq is even more dramatic, though, with how wide this channel is. Look at how wide that channel is. That's a really wide channel. Okay, the big problem I have right now is by the time we get down to that low, this thing's going to feel very, very bearish, right? It will. So in my experience, when you've got these really wide channels, right? This is the Nasdaq, of course. We're definitely bullish. Sorry about that. We're bullish. I want to buy at support, right? I want to buy at support. I've got this channel high off of that low. The midline looks marvelous. I want to be a buyer off of that low. It's a wide channel, which means we're going to probably have some difficulty buying off that low at first. We'll talk about that in a moment. But look what else we have here. I got a prior support level back here at 42.5. I got this little guy here as well. Strong move up, double top. Again, just like the S&P, that area is a great level of support. So in all reality, this whole area right there, right? This whole area right there is really going to be a great spot there for us. I want to be a buyer. I want to buy at that support level. My only problem right now is with that strong move up, I get the 1, 2, 3 coming down. I'm going to draw that trend line over, right? I want to get it up, over, and go. That's one option for us, right? Up, over, and go. If we don't get that bounce, the key to this is you want to get the move up, over, right, and go for that two-legged pullback, right? The 2LP pattern that we talk about on this newsletter. The other scenario is, right, if we run lower here, because that momentum is so strong at that point, you want to let those bears try twice, right? Let them try once, let them try twice. Once we've got bears trying once and trying twice, now we know where stops are, and now we're buying right into those stop losses. In fact, because we have so much space here, we might be able to get a failure into a pullback before that run back up, right? That failure pattern and that pullback before we make that run back up to retest those highs, right? Does that make sense? Right? So big strong move down, bears try once, bears try twice. We're buying into those stops. Then, of course, buying that pullback. Where's my target? Target number 1 is back to retest the high. Target number 2 is what? Measured move. 1 leg, 2 leg, 3 leg, right? There's your runner up around that 73.20, 73.18 area, right? Give or take a few ticks there. So that's if we get the pullback and get that seller failure pattern. I would also imagine, too, that there's always potential this thing just jumps, right? If it runs higher, especially ahead of news or into news tomorrow, don't forget those 4 patterns we talked about on oil: spike in channel, spike in range, spike in flag, right? Or dumping back down into a reversal. Probably not going to reverse, right? But you always want to make sure that you're ready for it. How does this market turn bearish? Right? How do we turn bearish here? We hold the pullback, right? Strong move down, moving average comes over, they hold the pullback, and they run off the moving average, right? The key is they run off the moving average. Here's a good example from earlier on in today's session. Look what happened here. We had a strong move down, and we talked about this stuff this morning in the trade room, and the fact that we saw how, does that look like they run off the moving average? And you tell me. Does that look like those sellers are going, whoopee, let's go, right? No, they're not. They're stuck around that moving average, right? Now look back here. Jumping, right? See when it jumps? See that? It jumps off the moving average. Did the bears do that here? They tried, but look, they kind of, right? They kind of wah, right? It fell flat. So just that little clue off the moving average told you that's not a reversal, right? Keep looking to buy into failures, failure into pullback, right? And then right up. So remember, right, if we get that strong move down, we come off the moving average, and all we get is this, that's still a bull market, right? That is not a reversal. The reversal needs to jump off the moving average, right? Like, I'm free, let's roll, right? That's the feeling that comes into the market when it runs off that moving average. So if we do get that failure, right, if we do get that strong move down, moving average comes over, and we see him try once, and we see him try twice, they're not jumping off the moving average. No. They're just wrapping that rope right around their neck, and that's the failure, right? That's the first clue we need to look for longs. Right? We already know we're in an area of support. We know we want to be a buyer, right? And we're going to buy that failure, right? Buy that pullback. If it runs 1, 2, and then jumping off the moving average, now we have a very, very different story. Now we of course mark up that low, off that high, again, all the way up that high. That gives you now the sweet spot. And now we're looking for what I always look for inside that little kind of, setup there is a failure pattern, right? So it goes up, it tries to buy off, right, off the moving average, failure into pullback, and then back down from there, right? So imagine that right there, right? It's kind of, zoomed in on that. Right, goes up, the buyers are to buy the pullback, and we're selling into that failure. And again, we see a lot of those examples in our trade room, and of course, I've got them included right in that free course, upper right-hand corner or down below us here as well. Also, again, keep in mind too, possible sideways range up here. Maybe a sideways range. If we do go sideways here, what's the plan? 1, 2, and then up. Right? If we do go sideways there, 1, 2, let them try once. Let them try to sell the pullback, right? Once you get 2 tries there, right? Then look for the buy back up. We see this quite a bit in these markets right now. Also, too, if it goes range bound, right? If it goes range bound, I've got a couple breakout patterns. Let's talk about those breakout patterns on the gold. Right? Because gold is inside of a range right now. Let's talk about gold here up next. We got the Nasdaq, got the S&P. We got a good plan on that. Now over to the gold and the euro. Now, it's my job to warn you about this. Gold is probably going to be difficult tomorrow morning until about 9:30, 9:45 when things kind of slow down. I hope I'm wrong. And I will be honest, historically, gold is the most difficult to trade on Non-Farm Friday. But the last two Non-Farm Fridays, gold's been pretty good before and after. So, one of the things I always tell my clients is get to your desk every morning and stay positive, stay optimistic, and see what the market gives you. I don't believe in seasonalities. I don't believe in it always does this and don't even try. I hear people tell me all the time, I don't trade Fridays or I don't trade Mondays. And I'm like, well, what do you trade then? You know what I mean? If you can't be closed-minded like that. So although historically gold is a little bit touch and go on Non-Farm Friday, I would encourage you again, keep an open eye tomorrow morning. If it's moving well, trade it. Right? But if it's slow and not moving in the pre-market, stay away. If it's just grindy and kind of has that kind of angry feeling, you know what I mean? Kind of that angry, kind of frustrated feeling after the news comes out, give it some time. There'll be plenty of other markets we can trade tomorrow. So just be aware of that, right? Be aware of that. And again, every day, the right mindset is, this is why I tell my clients I don't believe in a daily profit goal, because we don't control that, right? We don't control what the markets do. What I do believe in is coming out every morning with a positive attitude, an open mind, and saying, okay, it's a puzzle. You tell me, what are you going to give me today? Right? Which market will set up? Where will they be? Right? If I come into the market with the attitude of, I'm not going to get anything here today, or I've got to get something today, you know exactly what's going to happen. The opposite of what you have set out and have that closed mindset for. So keep an open mind, stay positive, stay optimistic, It's the best alternative, right? It really is. The only other way to do it is to have a closed mindset, and well, you won't be a trader very long with a closed mindset. You got to stay open. You've got to be comfortable being uncomfortable, right? You've got to kind of roll with it tomorrow morning as this news comes out. Okay, bottom line, off my soapbox here. What do we have here? Strong move up, right, into that trading range. Okay, range-bound market. Now remember, right, there are a couple different things you want to think of when it comes to a range. Let's talk about this for a second. Okay, range-bound market. What's the most important thing you want to remember? When it comes to a range, you want to buy low, you want to sell high, and stay away from the middle. Okay, buy low, sell high, avoid the middle. What I want to do is I want to get as far outside the range so I can get a good risk reward going back into the range. Okay? You know, in my trade room, you'll hear me say, risk small, earn large, risk small, earn large, right? And that reminds me, stay away from patterns like this, right? This is not a good, right? You don't want to be trading inside the range. What's going to happen is you will see great setups that happen outside the range, and they'll be very reliable because they have a good risk-reward ratio. You'll then see the same basic setup, right, happen right inside the range, but because it's setting you up right in the middle, it'll usually chop around and then kick you out. Okay, so again, buy low, sell high, avoid the middle. And remember, you want to get out of that range so you've got a good risk-reward ratio, because when you've got a big potential reward on a trade, it attracts more traders, and that self-fulfilling prophecy, which we've all read about in the Day Trading 101 books, it's real. So when you attract more traders in, whether it be long or short, right, a pattern that has me selling just off the top is not nearly as desirable or reliable as a pattern that is much further outside of that range. Okay? Now, with that movement, though, comes a little bit of variation to it. Okay? So, first of all, let's say, well, right now the gold is bullish. Right? Gold is bullish. So we're bullish into that range. Let's play a bull scenario, and then the opposite will be true, right, for a bear scenario. In a bull scenario, I want to be a buyer below that low, and I can look for a breakout above that high. There are two basic patterns you're looking for in a bull range. One is a failure pattern. Let the market go lower, get that moving average coming down, right? Moving average, of course, going flat in the middle. It'll come down. Get those sellers selling off the moving average now. Now, what I always tell my clients is make sure it's obvious, right? Make sure it's clear. Now, we'll go into more details tomorrow as far as what I mean by that. But you want to see a clear, right, a clear leg lower, a clear, right, obviously sellers selling into it. I'm not going to give away all my tricks of the trade, so to speak, right? We'll talk about that tomorrow morning in the trade room. But I've got a couple really simple rules that I tell all my clients of how to qualify that. And then, of course, from there, now we know where stops are. The key here is that setup triggers before we go back into that range, right? You're buying it right as it's running into stops and before it goes back into that range. Again, that pattern, if it happens just a little bit higher, it's not nearly as good of a setup. So you'll see in the trade room, right, I avoid patterns like that all the time and take the trades that are outside, right, of that range. Now, that's the most common. What is also very frequent is if we have that same idea again now, right, of that range into a, right, bull market range now, we go down, bears try, and back up. Well, another scenario is sometimes it really runs, right? Sometimes it really runs. And we get that strong breakdown, which may happen tomorrow on Non-Farm Friday. In that situation, because that momentum is so strong, now I've got to respect those bears, let them try once, let them try twice, and then back up. And I think this makes sense, right? If it's a relatively shallow pullback, shallow move lower, yeah, let those bears, let them try to sell into that moving average, right? And as long as I'm outside that range, right, I can be a buyer on that. But at the same time, though, right, if this thing really cooks, to the downside now, anytime we see a strong move in one direction, you're going to probably see a second leg, right? So you've got to give them once, twice to get that job done. And then again, once we see 1, 2, we're buying into those stops back up into that range. Now, obviously, I'll fill in a lot of the gaps on this, right? This is just a basic illustration of this. I'll fill in the gaps of finding the right range, right? Adding in the right support levels so you know where to look for those entries. We'll talk more about that in our classroom sessions because that will really kind of, buff out all the edges on that and give you a much more seamless entry and exit plan. And I give it all to my clients every day, obviously, in our trade room. But the reality is those are two things to consider, right, on that move. Now, another scenario you want to keep in mind is how do we break out, right? How do we break out? So now we're bullish. We go into a range. We've talked about what to do down here, right? What if we go higher, though? Right? What are some options now for me going higher? There are two basic patterns I like to use for a breakout. And these will both apply to gold and obviously too for the euro, which you'll see in a second. The breakout. Here's the aggressive one. A strong move up. Now, that strong move is going to prompt the buyers who are already in this position to take some profit. And the market will pull back once. Okay, you don't want to buy that one yet. Because what I will do if I was a seller is sit right above that high and just wait to sell the foolish breakout buyers. Because that's a rookie buy right there, right? That's the fool's buy right there, buying that high. You are buying high and then buying higher than buying high. It's probably the most unreliable trade you can possibly take. What happens a lot of times is, right, see why I say it's a fool's buy? With the fool's pullback, right? That second try now, or that second move up, now those bears come in again, they'll try it again, right? These are the sellers now coming in. So the first one's the profit takers. The second one is the actual sellers coming in and going, oh, you poor fools, let me take your money, right? Here, let me lighten up your load a little bit, right? And take some pennies out of your back pocket and send it back in. That's what's happening right now. It's a range. Right? So it wants to go back into that range. So what's happening is you get the breakout, the profit takers happen first, the sellers come in second. I like these to be higher again, right? Higher. And then once I've got that, now I've got the buyers now on the sidelines now. They're eager to get back in, and the sellers are now stuck. Now I know where stops are now, right? And now I'm buying right into those stops. Now there's nobody there to sell into my entry. Right? Now I'm not providing liquidity for the sellers. I'm now just basically, because remember, if you're a seller up here, if you're selling that high, you're not going to give it much wiggle room, are you? You're probably not, right? Most people who are trying to sell that bull market up there, they're going, okay, small stop, right? Give me a reason to get out. You know what I mean? If I was going to sell that high, I would say, okay, small stop, big target, just give me one reason to get out. So it's not going to take much. Usually it takes just a big green candle. And whoever sellers were selling into this bull run, right, they're going to get spooked. They're going to buy their way out. And that market will usually slam higher. Okay, I call this a two-try breakout pattern. It's pretty much the only breakout pattern that I really trust outside of what we call the two-try breakout. The the 1, 2, 3 breakout. And the 1, 2, 3 breakout, final setup here on the gold and really the euro too, is going to be the 1, 2, 3. This one's not as sexy. It's not. This is a lot more conservative. Okay, this is the pattern that I tell my rookie traders who are on one contract and need the most reliability, right? Use this pattern. Wait for the 1, 2, 3. Remember the 1, 2, 3, strong move up, pull back to the moving average, and then strong blast, right? Jumping off the moving average. Because guys, this could easily do this, right? It could easily try once, try twice, and then back down in. That is a sell, right? It's a counter trend. It's a nested failure pattern to the short side, right? Same pattern we talk about on the opposite side, right? Like I said, you can apply that same pattern down here. You can apply that one up top here, just the opposite direction. Bottom line is, I've got to wait for that strong move up, that pullback, and that jump, right? Yippee! Right? Remember, think of that little exclamation, right, at the end of that move. Now, mark up that high, find that low. There you go. There's that sweet spot. When this thing pulls back, okay, when it pulls back, it'll usually be just below the moving average, pulls back, seller failure, buyer pullback, and go from there, right? That the same basic sequence that we've talked about so far. All right, guys? So 4 basic scenarios here right now. Did you learn them all? I'm going to go over one more time here, right? One more time. So now I've got my trading range. And again, as a client of mine, you'll learn all the details of finding the right ranges, finding the buy zones, finding the sell zones. There is definitely a skill to this. There's a set of rules I'll give you, and we do it together every morning as well. But as long as we can get down low enough, right? It's bullish. I want to buy at support. My support level's here. I can line up these highs, bring it down here. Perfectly good there. Now, I get to run lower. I wait for those bears now to sell off the moving average. There's my stops, into my failure, into my pullback, right? And we run back up, right? 1 and 2 patterns there. Or maybe we get this real strong run, right? It really runs. Again, news comes out. It shocks lower. What do? 1 try, 2 try, back up from there. Right? 1 try, 2 try, back up from there. Again, I'm just drawing this. You'll see hundreds of examples as part of that free trading class. Remember, stay away from the middle, right? Stay away from the middle. I don't want the pattern that puts me right here. That's not a great looking pattern. I'm buying right inside that range. Yes, some of them will work, but no, you will not make money if you take all of them. Okay, that's the problem. It's very difficult. It's very difficult to cherry pick your way to success. Okay, and I don't want to hear this, well, I'll add an indicator and the indicator will filter the out. Indicators do not filter, they just give you more voices in your head. Indicators will not filter out bad trades. You can put as much lipstick on a bad trade as you want, right? It's not going to improve your effectiveness. It will just waste your time and give money to programmers to waste their time. Bottom line is, right, if we do get it lower, failure, back up, strong move down, 1, 2, and then up from there. As we go higher here, right? As we go higher here, strong move up. Bears try once, bears try twice. Bingo. What was that? 2 try breakout pattern. Profit takers, sellers, you're buying into those stops. Now remember, where's the objective? The objective is to retest that high, right? That's your objective. So this thing runs back up, you've already missed it. Okay, you don't want to chase after it up there. Okay, if we end up running all the way up, we'll probably end up going sideways up here, and it'll be a 1, it'll be a 2, the same pattern that we're looking for down here, honestly. Okay, or up 1, 2, and buy target is up at that high. Or it's a 1, 2, 3, mark up the high, mark up that high, mark up that low, and we're buying that pullback, right? Definitely leave a runner. Definitely leave a runner if you have an extra bullet in the gun for the runner tomorrow, because again, it is Non-Farm Friday. Now, reversal. 1, 2, 3, reversal, right? Got to hold that pullback and go. Mark up the low, mark up the low, mark up the high, right? And we're selling off that high. All right. We are running late on time here. I love the fact that you're still with me here tonight. Over on the euro is very, very similar to the gold. The big difference right now on the euro, we are bullish into a range. But the big difference, though, is it's a triangle. A triangle pattern, right? There's the big differences to a triangle is a triangle always has some direction. Well, I guess that's not always, but most of the time there's some direction. In this case, it's bullish. The key to a triangle is you want to mark the edges. So a little bit easier than a range or a rectangle, because the rectangle has a technique to it where you're going to find the right rectangle, project your expansions. You'll learn about that in our video classes. But the most important thing, use those edges. That marks your buy. That marks your sell. We've talked about this already a couple times this week, I believe. But the most important thing is, right, stay out of the middle. Buy low and sell high, right? Buy low, and of course, we won't sell high on this, right? We'll be a buyer on this one because it's bullish, right? But selling high if it was a bear market, okay? The other thing is that there's a vertex to it, right? You've got the pinpoint of it. Why is that important? Because if we stay inside the range, well, oftentimes once we get to the narrowest part of that triangle, nobody wants to trade inside the range. So the market will tend to break out either one way or the other. That breakout almost always comes right back to where it came from. And the only challenge is not taking the bait and selling it as it goes lower. So imagine for a moment, right? Imagine we end up getting into that narrow point here. We jump lower here. I'm still looking for that same basic pattern, right? That failure, that pullback, right? And that back up into that trading range. It's not rocket science. Once these two trend lines get close enough together, right, the market will probably want to go somewhere, right? It's going to have to go somewhere. So as we try to get it down, failure, moving average comes over and back up. If it runs higher, right? If it runs higher, right? 1, 2, 2 try breakout, or 1, 2, 3 breakout, mark up that high, mark up that low. You got it. You got it. Same basic idea, right? If we get a shallow pullback, right, it's a failure pattern. Shallow pullback, it's a failure pattern. If it's a deep, deep pullback, what is it? It's a nested, right? It's a 1, it's a 2, and then back up from there. Stay away from that middle. Buy those lows. Sell those highs. Speaking of which, right, how would you sell the high in a bull market like this? Right? What would you use for a bull market to sell it? Goes up, what would you do? You got to respect that momentum. So you use the what? The nested failure, right? The 1, the 2, yeah, then back down from there, right? You got it. You got it. All right. We'll see you guys tomorrow morning, obviously, again, 8 o'clock Eastern time, right? 8 o'clock Eastern time. We'll do it together. And again, like I mentioned repeatedly here tonight, don't be foolish. Don't be a hero. Tomorrow is not the day to put it all down on the long side, right, on one of these markets. Live to trade another day. Non-farm payrolls. If you haven't experienced yet, it can be a very slow market tomorrow around that news. It could also be a real big, nasty market too. So give it some time. And like I mentioned earlier, come join me tomorrow, 8 o'clock Eastern time, right? We'll buff off all the edges there, those sharp edges. We'll put the plan together. That way you can do it right there with me, because I think we all know there's money to be made tomorrow. It's just having somebody to trade with that knows what they're doing is really a great advantage. I would love to see you there with me. Don't forget, you can join as a member and be there tomorrow with me. It's right below the video tonight, right on the website. Grab the advanced membership classes. If you have any questions, right, just call that toll-free phone number just to the left of my ugly mug. And don't forget too, if you're not yet ready yet to be a member, I've got a great free trial. That free trial right to the left of me here tonight, that free trial includes our free trading course, a free pass for our trade room, hundreds of hours, right, of chart examples, and boy, oh boy, you guys will love that free trial. Keep in touch, call, email, Skype, live support. Tomorrow morning, 8 o'clock Eastern time. Remember, be very careful tomorrow morning. Promise me, keep all that cash in your account, right, until it's time to trade tomorrow morning. And of course, tomorrow night, no newsletter tomorrow night. The next time I see you be next Monday afternoon. If I don't see you guys tomorrow morning in the trade room, have a great, great weekend. Be well out there. Be nice to each other. And be here next time, will ya? Adios, amigos. Bye-bye for now.